Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good day, good morning, good afternoon, everyone, and welcome to another busy day in the financial markets with InstructFX. My name is Andrew, and today I'm bringing you the latest news from the markets before the opening bell, along with Reiaan Hobson from South Africa. So buckle up, hit that subscribe button, and let's get started. Here's what's happening in the markets today, 3rd of August, 2021. Right, the mask returns in the United States. More local governments across the U.S. reintroduced mask mandates, and some moved closer towards mandating vaccination as the spike in new infections across the U.S. intensifies. The state of Louisiana was noted as the highest number of new infections, and also half of the states in California are now subject to mandatory masks for indoor spaces through the rest of the month. The U.S. stock markets closed in the red yesterday, and today analysts are expecting of a positive opening with the Dow Jones Industrial Average and the S&P 500 up 0.4% pre-markets open, and also the heavy tech Nasdaq seems to be up 0.2% before the opening bell. The euro and the pound gained on the European trading session today, with the euro eyeing the 1.19 mark and the pound moving towards the 1.3950 level on the back of a weak U.S. dollar. The US dollar index traded lower in the last 12 hours, falling below the $92 mark after the ISM report released yesterday showed that the manufacturing growth in the US slowed down for the second month in a row. Cryptocurrencies also took a hit today. Bear with me for a second, I'm losing my charts. With ahead of the virtual discussion of the Aspen Security Forum with the Security and Exchange Commission's chairman, Gary Gensler. Gensler has previously indicated he has a strong interest in cryptocurrencies and blockchain technology, but that does not necessarily mean he will go easy on regulation when it comes to the digital asset space. Bitcoin traded to the downside today, falling below the 39,000 mark, and Ethereum is under serious pressure as tomorrow, 4th of August, we should see the long-awaited London hard fork happening, where Ethereum is implementing new protocols that will hopefully speed up the process and drop the gas fees. And now my favorite line, from Europe to South Africa, from Limassol to Cape Town and London. This is InstructFX News. US markets open, coming up. Right. Good day, good morning, good afternoon, everyone. Once again, joining us as we speak is Reiaan Hobson from the heart of South Africa. Reiaan, good afternoon. How are you?
Good afternoon. Sun is coming out. It's getting to summer. South Africa is looking good.
South Africa is looking good today. That's what I want to hear. Crude oil doesn't look good today, unfortunately. I saw a big drop happening a few minutes ago. What have you got for us today from the commodities markets, Reiaan?
It looks more about the mask mandates that's actually coming back in the United States. And I think that actually spooked the crude oil the crude oil prices. And I could see actually, this is on the one-day chart. And if I look at the 4-hour chart, it looks more messy. It's quite a strong candle downward. And it looks for me, we're going to go to the prices again of around 66 to 67, 66 level, which was actually a support. And I think we might actually drop there if things get more actually on this whole course of a mask mandate story. On the other side as well, the Chinese news that came out on Monday, which was the PMI figure, also put pressure. If you can look at this candle here specifically, with that news of the Chinese PMI that was bad on Monday, it actually dropped. I think it was in actually expansionary territory of 50 and over, but it did not actually beat the forecast, and that actually put pressure on crude inventory prices. Crude oil prices. And then we have the mask mandate of today, and that actually put even more pressure on on oil. It doesn't look good for oil, and also it doesn't look good also for commodity currencies, which is now Australia, Canada in particular. So it really doesn't look good for the commodity market, especially when it comes to oil. And also Brent crude, if you look, it followed the same suit downward. But which was funny, is actually natural gas. Natural gas is still keeping up despite all this mask wearing mandates that has been done by the United States. You have the story of China also with the new variant that goes there. And then also with the PMI news of China, natural gas is still the hottest commodity currently. And if you look at that headline of the Wall Street Journal, that natural gas is looking like this summer's hottest commodity. And there's one line in particular, although the article is closed, but there's one line here. The heat wave that caused the West has dissipated. Now, that is the most important part of that sentence, dissipate. But natural gas prices have yet to cool off. So it shows that obviously in the West is getting to winter, so it might actually dampen natural gas prices. And if you look at the chart of natural gas, then you sit a bit in two minds here. And I did draw this line the last time. This is now the 4-hour chart. If I go to the 1-day chart, where it actually was sitting around here for now since July 23, and it was pushing through the $4 mark, but it's absolutely going nowhere. So I personally, in my personal opinion, I will not touch natural gas on a buy side. I will look more for a sell side. Now, I could be wrong as well. And if you look at this article, this was, I think, an hour ago, with gas prices high. Biden tells OPEC, oil for thee, but not for me. Now, that is actually quite a nice comment by Joe Biden, but this is really not good news at all, because if you look at natural gas prices over the last, I would say, 10 years, it was more under pressure based on the US shale producers, because they produce quite a lot of natural gas out, and also oil as well. And that actually put on the lid for natural gas prices. So this topic, or I would say the statement by Joe Biden, is really not good I would say it's actually good for the natural gas price, because it can push it up higher, and also the oil prices. But for the consumer, is definitely not good at all, because if it means that he wants OPEC to do all the dirty work, then it means that the US shale producers will not get up to speed to produce the natural gas and the oil. And that means that these prices have the potential of going up. So basically on this part of natural gas, I'm still here in a bit of two minds here, because of that statement of Joe Biden, and obviously that the shale producers will not come back. And that might push these prices up, but due to the weather pattern, I think I'm on a sell side for natural gas, and also maybe for crude oil, but that is now all to do with the new variant, because obviously for me, oil do have the potential of still going up due to demand in the Northern Hemisphere.
Right, you're absolutely correct so far, Reiaan. We saw crude oil WTI tanking heavily in the last couple of hours. We see natural gas settling higher. There is a bit of discrepancy. We know these two assets usually go in opposite directions, like the US dollar and gold do. many times. So we're going to see what's going to happen. Right. We are exactly 15 minutes ahead of the opening bell. Today, we're going to have the API inventories later on, and tomorrow we're going to have the crude oil inventories, which I know you love so much. Right, let's take a 30-second break, and then we're coming back live with the economic calendar and the earnings calendar, because we have some announcements coming out from the U.S. This afternoon. And, of course, the earnings season is far from over. So stay tuned. We're coming back live in 30 seconds with the economic calendar.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, let's have a quick look at the economic calendar and see what's expected to happen this afternoon. We're going to have in 39 minutes from now factory orders month over month for the month of June, which is forecasted to come out at 1% by consensus versus the 1.7%, which was the previous. Later on at 2100 hours, we're going to have the FOMC member Bowman holding a press conference, followed by FOMC member Clarida holding a press conference. And just before midnight, we're going to have the API weekly crude oil stock. If we have a quick look at crude oil WTI in the last couple of hours, we can see a sharp drop. Currently, crude oil WTI is trading at $69.50. Big movement for oil, big movements for other assets as well, but I'm gonna get there in a few minutes once we have the official US opening bell. Tomorrow we're gonna have a huge day in the economic calendar, as almost all the European countries, along with the United Kingdom, will report their services PMI for the month of July. We're going to have the ADP non-farm employment change at 3:15 GMT plus 3, again followed by services PMI and market composite PMI, ISM non-manufacturing employment, crude oil inventories, and Cushing crude oil inventories will be announced at 5:30, 1 hour into the U.S. trading session tomorrow. Big days ahead. Let's have a quick look at the earnings calendar as well. We had a busy day on the earnings front of things. We see Eli Lilly reporting earnings per share below consensus expectations, 187 versus an expectation of 189. But in terms of revenue, they beat the expectations with 6.74 billion versus a forecast of 6.59 billion. As you can see, plenty of companies reported today. We have British Petroleum reporting 0.138 cents in terms of earnings per share. In terms of revenue, we're looking at 37.6 billion versus an expectation of 38.53. Now, it's big what's happening in the earnings calendar. We have a lot of high companies reporting. We're going to have CVS Health Corporation and General Motors reporting tomorrow. General Motors is expected to report earnings per share of 169 and a revenue forecast of $29.92 billion. And on Thursday, guys, we're going to have a big day on Thursday, as Mreana is reporting earnings per share, which are expected to come out $5.96. And on the forecast side, we're looking at 4.21 billion. A lot of big names still reporting, but the big players of the markets reported in the previous weeks. We saw a lot of green happening, a lot of green on these earnings calendars this year. And we have more things to talk about. I have an interesting news, Reiaan. I'm going to call it the gossip of the day. You can join me if you want. And basically, the gossip of the day says this. Are you ready? Digital asset funds suffer big outflows as Bitcoin price recovered, was the headline today. Did you invest in Bitcoin yet, Reiaan?
Not yet.
All right, Hold your horses just yet. Let's see what this article says, and then I'll ask you again if you invested or not, or when you want to invest in Bitcoin. Right, quick read through. Yeah, we're looking at centralized exchanges have experienced their heaviest week of Bitcoin withdrawals since November 2020, Cointelegraph reported yesterday. Bitcoin outflows from centralized exchanges have surged to their highest level year to date, with roughly 40,000 Bitcoins being withdrawn over the past 7 days. According to Glassnode's August 2nd, the Week on Chain report, Bitcoin outflows have accelerated to a rate exceeding 100,000 Bitcoin per month for the third time since September 2019. The interesting fact is that this year, while Coinbase saw big outflows, Binance was the largest recipient of Bitcoin so far. However, Binance reserves are now starting to drop, with 30,500 Bitcoin worth roughly 1.5 billion exiting the exchange in the past week. Coinbase, on the other hand, received 30,000 Bitcoins mid-July, and 31,000 Bitcoins were taken out from the platform in the past week. Basically, traders are taking out about 2,000 Bitcoins per day from centralized exchanges. What's your take on this one, Reiaan?
Well, that's pretty heavy. But it's very funny, like Bitcoin has been sitting at 38,000 now for a week or so. And only the whole thing with, what's the guy from Amazon?
Bezos.
Yeah, Bezos. He was talking about they will introduce crypto to Amazon. And then the whole thing flew up. And then afterwards, nothing happened. And that's always the confusing part with me with Bitcoin. I like your commodities give a good reason why X is going up or why natural gas is behaving. Only thing with Bitcoin, I mean, if someone says something and Bitcoin goes up, I mean, come on, how can I invest in something like that? So you need to convince me on that part.
All right, I'm going to do my best to convince you on that. Now, joining us live from the heart of London, Andrew Sachs, Head of Research and Analysis at ETX Capital. Andrew, very good afternoon to you. How are you? And thank you for joining us.
Hello, Andrew. Good to see you. Thank you very much for having me here. Yeah, interesting. You know, I was just listening to what you were saying about the outflows of some of the centralized exchanges. That is very interesting, but it's kind of an unusual circumstance, because if you look at that's very likely, I don't know that for sure, but it's very likely that these are smaller. There are probably a lot of smaller investors, because the whales, which are, that's a kind of jargonistic cryptocurrency industry terminology for accumulators of large amounts of cryptocurrency on one particular address, have been accumulating more and more over the last few weeks, and particularly Ethereum and Bitcoin. Those are the two where whale addresses have got bigger and bigger. And these particular accumulations happened when Elon Musk crashed the market by, exactly as Reiaan said, how can you invest in something where someone who's nothing to do with anything styles himself as a market maker, gets onto Twitter, says something, and then $1 trillion gets wiped off the value of something? It's completely crazy. But of course, what it did was it got a lot of new people interested who are not necessarily speculators. They're astute middle-class people with a good education around the world who they effectively saw an opportunity. Okay, well, if it went down now just because of that, then you can be quite sure that this is now an influencer-driven asset class, so it will go up again. So a lot of very astute people, some of who I know quite well, friends of mine who don't work in this industry, who are software engineers and things like that, had said, oh, maybe I'll just do a little bit, see, because it might go up again. It's here to stay. So those are dabblers, what I would call dabblers. But the whale addresses are accumulating highest levels ever at the moment. So I would say that is really something interesting. I mean, it makes up a small percentage of cryptocurrency investments, but it's still quite an interesting thing. If the whales are accumulating, it means that there is some confidence there.
But what do people do with it, Andrew? Are they cashing out, you think, or reinvesting when the price tanks?
I think that's what they do. They reinvest. It's a bit like, if you think about it, it's a little bit like the meme stocks that we've seen since January. The cryptocurrency world was very different before before this year. And it's not only different in terms of the way people approach it, but in the technology that's come up around it. There's now Ethereum level 2 there's Ethereum 2 is out, but it's coming out, and there's level 2, all of the technology that surrounds all the smart contract capabilities of it. So there's a lot more fintech orientated stuff that's in the background. But because of the meme stocks having been come up on Reddit in January this year, and therefore you have the same principle. You have groups of people on social media forums able to influence the price of stocks, actual physical stocks, on company stocks, on public stock exchanges, and most of those have been those who have been admitted to public stock exchanges via SPAC listings. Therefore, they've bypassed all of the correct regulatory and due diligence that usually goes with making a public listing on a stock exchange, and you see people influencing the prices of those. So therefore, what's happened is that has got itself into sort of the same category as cryptocurrency, where influencers are starting to see, oh, I wonder if I can drive the prices up and down. So they are divesting, and then they're reinvesting, and then they are holding on to things and then reinvesting at the low points. It's a very speculative market, really, I would say.
And a very risky one, if I may add.
Very much so.
I personally saw a change of trend when it comes to cryptocurrencies. Now that more and more institutions are offering crypto assets, and the headlines are always big. For example, JP Morgan offers crypto assets to its rich clients. Bank of America offers crypto asset services to high net worth individuals. So I think the average person kind of gave up on Bitcoin as it became too expensive and way too volatile. What do you think, Andrew?
Well, I think that is a lot of those headlines are extremely sensationalist, and they are done for two reasons. First of all, it is we live in a several years of low volatility, and a lot of the electronic trading industry has even the retail electronic trading companies have really almost built their business model around a low volatility marketplace. So that's all very well, because you end up in a long-term business where there are no serious issues apart from the occasional one. If you think about the last 20 or 30 years, you can only really think of the Swiss National Bank, when they pulled the peg on the euro franc, which caused unprecedented volatility and claimed the existence of some brokerages, exposing clients to negative balances and so forth, or other such things like that. But there aren't many circumstances where there's much volatility, whereas in this cryptocurrency, it's highly speculative, highly risky, it's unbacked, very volatile. So it relies on the fact that there's no volatility in some of the traditional markets. Some of the people with vested interests in making people trade crypto, for example, some of the cryptocurrency companies and exchanges, will do this, put out very sensationalist media articles to try to influence people to say, oh, look, the banks are now offering it. Everyone's jumping on this bandwagon now. You've got to get in now because, look, it's all going institutional. Bank of America is on it. But really what they're actually doing is those banks realize that in the cryptocurrency world, they're seeing it as a fintech offering. And they will look at it as a development phase. It needs to be regulated. It needs to have proper regulated exchanges, and they'll look at the fintech aspect. For example, the smart contract capability of Ethereum, where you can actually do everything from you can have clients signing commercial leasehold agreements for office premises using an Ethereum smart contract, or you can have commercial settlements where you have one massive commercial settlement of a big shipping company or something settling their foreign exchange in a different country. And why I mentioned shipping companies is because a lot of them operate in China, and the yuan is heavily currency controlled because it's a communist country. So you have to pay huge fees to settle anything outside or into yuan, to transfer it between yuan and a free market currency. So there's that. So all of these ideas of cryptocurrency is not a case of them jumping on the speculative bandwagon. You're not going to have people going onto Bank of America's platforms and trading Bitcoin in their front room. No. It's going to be commercial settlements. It will be blockchain-based ledger platforms. It will be investment in helping good quality crypto exchanges invest in the development of smart contract systems and so forth, and also work with regulators to help regulate it, so that yes, it is here to stay, and yes, it is an underlying asset, but the banks now will want to get it so that they are able to be part of that ecosystem in a sustainable fashion. That's how I see it.
You mentioned regulators a second ago. Recently, there were talks about a global regulation of cryptocurrencies. We saw Christine Lagarde advocating for it last week, and we saw a lot of people. Actually, as we speak, we have a forum going on in Aspen, where the head of the Security and Exchange Commission is addressing this issue. One, when do you think a regulation will come out, or at least some guidelines, some general guidelines, and what would be the impact on the crypto prices when that comes out, Andrew?
Well, it's already started. There are some jurisdictions which will regulate crypto exchanges, and this is where now regulators, it's going to get global in the end, but it will be rather similar to, I think, having an actual single one-size-fits-all regulation for cryptocurrency is the ideal outcome, but it's not practical because it's rather different to regulating any other asset class. It's not like regulating commodities, because the SEC can do that on commodities exchanges in the United States, or the Australian authorities can regulate the Australian Stock Exchange and the commodity warrant in Australia. Cryptocurrency is the same everywhere in the world. It's the same asset class everywhere. So one set of regulation would be ideal, but it's not workable because you don't have a global government, and therefore there are differences in how each government sees risk appetite and things like that. So it is starting. In certain parts of Europe, there are ways of regulating venues and trading venues for cryptocurrency, but of course that's now what that's done is it's pioneered the effort. So you will now see this is one of the reasons why Binance has got itself into a bit of trouble, because nobody would have said a word before. All cryptocurrency is unregulated. It's all borderless. It's what we call in the software engineering industry airware. It doesn't have a physical presence. It doesn't exist. So therefore it is not tangible and so forth. So it's up to you what you do with it, because it's vaporware. It doesn't exist. So but nowadays there is some regulation coming. So that's what's Binance went in there, and they've basically tried to get big on the back of what you could call regulatory arbitrage. They're seeing an opportunity where there is no regulation for that particular asset class. They go in and they quickly grab the opportunity when all the other asset classes in that sector are all regulated, like, for example, physical assets and gold and other commodities and currencies are all regulated, and there's less free movement for those who don't want to be curtailed by regulation. But really what's happened is it backfired on them, because all the governments in Europe, all the governments in very developed areas of financial markets such as Europe, or now you have in India and other countries, are banning even if not banning Binance, they're warning people not to use it because it doesn't have the right licenses to operate there. So it kind of did backfire.
Yeah, they're banning Binance more or less.
Banning it. They're banning it by saying they're not really allowed to be operating here. So they are sort of banning it as best they can, bearing in mind that it doesn't have there's no regulatory remit for it to be accused of transgressing. So all best they can do is say, look, this is not allowed to be here. So I think this is a milestone now. We will now see other trading entities that have got aspirations of being very large and going, or even existing companies that want to go into that sector saying, oh, look, we better do this the proper way.
Right. Okay. I'm with you. Now we're 3 minutes into the US trading session. I have one last question for you, Andrew. Tomorrow, it's a big day for Ethereum. We're going to have the long-awaited London hard fork happening. For people that are not familiar with the matter, tomorrow Ethereum is implementing some heavy changes to its protocol, and one of the most discussed changes was the EIP 1559 that is supposed to change the way miners are being paid, burning the excess and allowing miners to get tips from traders that want their transactions solved faster. Sounds like bribery at its best. Do you have an overview for Ethereum in the near future, Andrew? Are we going to see a big spike tomorrow, you think?
I don't think so. I mean, you can. That's the thing is, anything is possible with these things because they really don't follow the same patterns as anything else. But it looks to me as though miners are taking a bashing at the moment everywhere in the world. And if you look at the Chinese government, what they did to all the Bitcoin miners recently was go around and ban them all and block them. And there was a huge amount of massive Bitcoin mining rigs operating in China, taking advantage of either cheap or free electricity. Now they're banned, and there's a load of graphics cards available on the second-hand market, to the point where Nvidia, the publicly listed graphics card company in the United States, has been one of the only computer hardware companies in the world that's right up there stock-wise with all of the big cloud technology companies, because their graphics cards are still very much in demand. So now they're not, because there's a lot of second-hand ones being dumped. So Nvidia's share price collapsed in the last couple of weeks. So I think you can see that means there's a lot more mining opportunities now. So Ethereum is still obviously much less of a prized commodity than Bitcoin, but still the miners are likely to take in my opinion, they would take an objection to this new way of being remunerated. I think it will go up against what they're, because you see Ethereum miners often see themselves as people who are taking their part in the development of Ethereum. They're not just mining it to drive the price up like Bitcoin miners are, or to hold their assets. What they're doing is they are Ethereum miners see themselves as people who are developing the actual protocol, all these new protocols like Uniswap and things like that, which are all very much designed for Ethereum, Ethereum level 2. So I think they see themselves more as software engineers and developers who are intrinsic into the development of a new, not just currency, but a whole new financial ecosystem, which is Ethereum. So I think you'll find that there might be a spike because there'll be less people willing to mine. They might say, well, you know what, all my hard work, it's not worth it for me, and they'll pack it up. And therefore that will drive the price up. But on the other hand, they might sort of go up against it and try and lobby Vitalik Buterin and his colleagues to try and say, hey, you might want to think twice about that, because we're actually helping you develop the most sophisticated cryptocurrency asset in the world. Could go either way as far as I'm concerned.
Right. Yeah, fair enough. Right. Currently, Bitcoin is trading at $2,513. We saw a pullback happening today on the European trading session. Luckily, cryptos are traded 24/7 all year round, as they are decentralized. And now we see Ethereum basically getting rejected from that support level at 2,470 to 61 and pointing to the upside. Now, because I own some cryptos, I keep all my fingers crossed.
Do you really?
Tomorrow. Yes, I do.
You're a brave man.
I know. We're going to see tomorrow how brave I am. Right. Andrew, thank you ever so much for your input today. I'm looking forward to the next one. Now, we're going to have to move to the charts of the day, as we are already 8 minutes into the U.S. trading session, and I want to see what happened with the charts. Andrew Sachs, everyone. Andrew, thank you ever so much.
Thank you, Andrew. All the best.
Take care. Right, ladies, gentlemen, traders, I wanted to take a 30-second break before we move on to the charts of the day. But since we are 8 minutes ahead of the schedule, we're going to switch on to the charts of the day, along with Reiaan Hobson, again joining us from the sunny, not so sunny South Africa. Reiaan, what do you reckon about the markets? How are we going to see the markets today?
I think it will be, excuse me. I think we will have a bit of a confusion today, especially on the not on the crypto side, on the forex side specifically, with a mask masking story now coming back in the United States, and also I think it was in the London session where I saw the Australian dollar was starting to move in the right direction with the tapering story that's happening there. So I thought maybe Australian dollar is going to pick up some steam, but then I saw the confusion comes in with the mask mandate of the United States. So I think we will see an up and down movement for the market. Not my liking of trading, honestly not.
Right. Okay. Hold your thoughts. Let's move on to the charts. I'll do the FX, the US dollar index, some stocks and cryptos, and then you can take over with the commodities markets. So, ladies, gentlemen, traders, let's have a quick look and see how the markets open today on this beautiful what is it today? Tuesday, 3rd of August 2021. We're looking at euro falling sharply after the opening bell of 118.70 for the euro versus the US dollar this afternoon. Let's see what happened with the pound. We're looking at the pound again trading to the downside after both the euro and the pound gained on the European trading session today versus a weaker US dollar. It was time for a reversal, some people might say. So there you go. This is the reversal. So the euro and the pound trading to the downside, 10 minutes, 15 minutes into the US trading session. USD JPY is trading to the downside as well, 108.91 and dropping as we speak for USD JPY pair. The Aussie dollar seems to be pointing to the downside as well, 0.7373 for the Aussie dollar. A few minutes into the US trading session, we see USD CAD pointing to the upside today, 125.57. Let's see how the S&P 500 opened. It was supposed to open to the upside. Let me change to 5-minute chart. There we go. We saw a positive opening followed by some massive sell-off happening on the S&P 500, 4386.60 for the S&P 500, and Dow Jones Industrial Average exactly the same. We saw a positive opening, and that was followed by some heavy selling happening, 34,802.95 for the Dow Jones Industrial Average. There we go. Now, quick look at the US dollar index, 92.058. We saw the US dollar index gaining a bit after the opening bell, and that usually reflects on the USD CAD. Okay, there we go. Yeah, USD CAD pushing to the upside, US dollar index pushing to the upside. Quick look at Bitcoin, which started a very shy correction after the opening bell, $38,623 on the dot for Bitcoin versus the US dollar, and Ethereum is also trading to the upside at $2,520.58. Little gains on Bitcoin and Ethereum so far today. More losses than gains, I would say. And we are 24 hours away from the long-awaited London hard fork. Now, Reiaan will bring us the latest news from the commodities markets, metals, soft commodities, and, of course, crude oil, WTI, and gold. Reiaan, what do you have for us today?
Well, as I said, it doesn't look good for the commodities, and you can see also with the gold here. Gold has been stuck here for quite some time since the speech of Jerome Powell, and that was the only time where the gold price actually went up due to the dovish stance. And after that, nothing happened. Gold is actually was sitting. It's basically sitting like a duck. It's going absolutely nowhere. So basically, it's a very uncertain market, and it's very choppy, especially from the commodity side. And if you look at energy, as what we know now, the energy price is actually tumbling. It's actually 2.5% down. That is your crude prices. And then your Brent is also with 2.31% down. Natural gas is the only surprise in the market that is actually up by close to about 1%. But honestly speaking, with your crude oil inventories, especially with your mask-wearing mandate, it's a very choppy market, especially from the commodity side. Now, the other thing is, as Andrew pointed out now, that the US dollar index is pointing up in the right direction. And if that persists, then I think that will be more pressure on the energy sector and also on the metal side. On the soft commodities, this one is always being a surprise. Cocoa, coffee, corn, okay, besides cotton, but the top three, which is cocoa, coffee, and corn, is all in the green. Cocoa has been on a roller coaster now since I think it was, since the beginning of August. It's actually reversing back and is coming backwards up. But honestly speaking, with cocoa, the same thing with natural gas. I think that that story for me is a bit overdone, especially when it comes to natural gas and cocoa, and also with coffee. As for me personally, I think the market is actually recovering, and we will get into a winter period later on. So for now, I think these prices of cocoa and coffee will maybe cool a bit off, and then afterwards, when the winter kick in, and I think that is where you will start to see cocoa and coffee maybe going up. But on the metals and on the energy, for me personally, I think this is sell written all over, especially if you look at the 4-hour chart. 4-hour chart specifically, that is a very strong candle there, and I think we might see some more pressure on the crude oil prices and also for the commodity prices, which is commodity currencies, which is now Canada, Australia, and New Zealand.
Right, Reiaan Hobson bringing us the latest news from the commodities markets. Reiaan, thank you ever so much for your input. Ladies, gentlemen, traders, we're going to take exactly 30 seconds, and then we're going to come back live with some news about some very interesting stocks, and we're going to have a look at some cryptocurrencies news as well. So stay tuned. We're coming back live in exactly 30 seconds.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, and we are back as promised with some very interesting stocks today. The headlines today before the opening bell was that PepsiCo, Under Armour rise pre-market while Eli Lilly and Clorox fall. Let's see what stocks are best performing and worst performing today, as we are already 20 minutes almost into the US trading session. So we're looking at NetEase, which stock fell 8.8%, and Tencent Holdings also weakened after a critical article in a state-run Chinese paper raised fears that the video gaming sector might be next to feel the pain of the Chinese regulatory scrutiny. So very likely NetEase and Tencent Holdings will head to the downside today on the US trading session. On the other hand, PepsiCo rose 0.5% after the soft drinks giant announced plans to sell its controlling stake in Tropicana, Naked, and other juice brands in North America to private equity firm PAI Partners for $3.3 billion. Why are you laughing,
That
Reiaan?
was a funny one. Naked and other juice. That
was funny. That's why, that's why exactly I held back from reading it, because it's the first time when I'm reading it. I thought someone was playing pranks with me. But anyway, let's move on. So, PepsiCo and Tropicana Naked, yeah? Right. Alibaba fell 1.2% after the Chinese tech giant reported a 34% rise in quarterly revenue on Tuesday, helped by growth at its cloud computing and e-commerce businesses. Eli Lilly fell 1.9% after the drug maker missed quarterly profit expectations, hit by weaker sales of its COVID-19 therapies as vaccinations ramped up. British Petroleum rose 5.7% after the UK-based oil major announced a higher dividend and increased its buyback program after returning to profit in the second quarter. You see, Reiaan, this is where you could go. This is what you could go for, because you like your dividends, you like your crude oil, you like your commodities.
Old school.
You could go for dividends if you don't want to invest in Bitcoin and Ethereum.
I like my old school.
You like old school. All right. Right. Let's move on. Let's see what other stocks are doing well and what other stocks are doing bad today. Under Armour, stock rose 6% after the athletic clothes retailer raised its annual revenue forecast as customers returned to gyms as COVID restrictions were eased. Marriott International rose 0.8% after the hotel chain returned to profit in the quarter compared to a year ago loss as the tourist industry began to recover from the battering virus. Hold your breath. Yeah, hold your breath, because it's not over yet. We might see more things happening. I don't want to jinx it. I don't want to talk about it, but I wouldn't get ahead of myself if I have a hotel right now. Fair enough, Reiaan?
I agree with you.
Yeah, we don't know what's going to happen. Discovery rose 1.1% after the streaming service beat expectations for the second quarter revenue today, helped by streaming subscriber additions attracted by ongoing Tokyo Olympics. I don't even want to go there. And we have Simon Property Group rising 2.8% after the U.S. mall owner announced that sales at its shopping centers returned to pre-pandemic levels in June. Once again, hold your breath for that one. I don't want to jinx it, but I think there's more to come this year than what's happening now. What do you reckon? Are we back to pre-COVID levels, Reiaan, or not?
Not yet. Definitely not yet. It's still a lot to do with the new variant. And I think not yet. The last thing that I needed to add with the Tencent holding, the South African company that carries about over 20% of the JSE, of the Johannesburg Stock Exchange. It's called Naspers, and Naspers is also under pressure because of their link to Tencent. And I see they've been trading in the red since the whole uprising, I would say, of the Communist Party, and that is actually a sad part because that also pushed the JSE Stock Exchange in the red. But luckily, our commodities were the saving day for us there.
Always commodities save South Africa. Right. Let's have a quick look at some stocks. We are 21 minutes into the US trading session today on this beautiful, what is it, Tuesday, 3rd of August. I don't know why I think it's Thursday. Right. Let's have a quick look at Apple. Apple is currently trading at $145.89, 20 minutes into the US trading session. Nothing notable happened there. Yeah, if you look at the last candlestick, you can see equal buying and equal selling happening. So nothing is happening with Apple today. $145.82. Amazon, wow, check this out. Wow, big drop for Amazon on the US trading session. We're looking at Amazon opening to the downside, then trading at 3,325.30, and by the looks of it, the price is going to go even lower. Check out this huge gap that was left at the after the opening bell. Yes. Now, we know these things happen. I'm going to get to the S&P and the Dow Jones in just a minute. These pullbacks in the financial markets happen very often, and these are the times when people buy the dip. Now, it might work. It might tumble even further. This is the thing that no one can tell you, but usually this is an opportunity for many experienced traders. 3325.68 for Amazon. We're looking at Nvidia trading to the upside after the opening bell. It reached $202.08, and it started pulling back sharply at 198.71. Right now, we're looking at Tesla. Let's see how Tesla is doing. Very good push for Tesla in the last couple of trading sessions. $711.33 for Tesla this afternoon. We see Facebook trading to the downside and filling in that gap that was a couple of trading sessions ago. Yes, it is a big gap, but not as big as the one we saw on Amazon. $350.31 for Facebook this afternoon, pointing to the downside. Okay, let's see what's going to happen. I'm not going to be surprised if I'm going to see Facebook trading even lower today at 344, or why not, even the 340 mark. Right, Alibaba, again, trading to the downside after the opening bell, $192.88 for Alibaba. I saw an article earlier on that Alibaba shares tank after something. I did not follow up exactly on the news. Right, Bitcoin, meanwhile, trading to the upside, I'd say $38,540, 20 minutes into the US trading session. And we're looking at Ethereum gaining a bit one day ahead of the big London hard fork at 2,518.08 as the price changes as we speak. Right, quick last look at the S&P 500 and the Dow Jones. And now, Reiaan, I need your input on this one. I saw something a couple of days ago, which scared me a bit. And apparently my prediction was correct, although I didn't want to go public with it. Okay. There is the top. Okay. And what are we looking at there? Yeah, we see the markets struggling to create higher highs. I don't know if that's a head and shoulders pattern, but I can clearly see that the market created a lower high. Yeah, that's at roughly the exact height, yeah, to the one in the left. Okay, and we see the price tumbling. This was my prediction a couple of days ago. I didn't want to say it public, so people don't think I'm giving investment advice on the US benchmark. Yeah, the US indices. And there we go. We can see the similar thing happening on the Dow Jones Industrial Average. Right. What's happening with this sell-off, Reiaan? Are we in a big sell-off in the markets?
I think There's so much uncertainty that goes around. As we discussed with this new variant, the Chinese economy, or I would say the Chinese government that's cracking down on companies, and also they were complaining about the high commodity prices, and that is also to do with it, with the Dow Jones. And also you have the PMI that were going down in the United States, the ISM PMI. Look, it will be actually a surprise to me if I see a correction, because there's still so much, a lot of liquidity in the market. If there is a correction, I'm sure people are going to just buy the dip because of the amount of liquidity that's in the market. So I think there's nothing much, I would say, to worry of. I think it's maybe just a correction, and then we're going to go on again.
Yes, that's what I'm thinking as well. I'm predicting a pullback, though. Look what happened. Sorry, look what happened in the past. We saw this pullback happening on the 19th of July. We saw another sell-off happening on the 18th of June. Hold on, I think we're onto something. We might have a pattern. And it would have been too nice. The previous pullback happened on the 4th of March this year. Yeah. Now, there's from the technical point of view, yeah, we can do something else when things like this happen. We can break it down in two. Yeah, we can draw a center line, okay, and we can see that the weakness is there. Yeah, as the price action moves in the lower part of this trend channel. Yeah, it makes sense. Does it make sense?
Absolutely.
Yeah. So while between, let's say, the 5th of March, yeah, up to the 14th of June, we saw the Dow Jones Industrial Average pushing higher and trading in the upper half of the trend channel. Okay, recently we saw it pulling into the lower half of the trend channel.
Right.
Okay, so based on this, again, this is just technical analysis. So we know when we're talking about stocks, yeah, or cryptocurrencies, technical analysis doesn't weigh so much, as any news could completely shift the direction of the markets. But from the technical point of view, this is how it looks like from my side. Am I losing my mind, Reiaan?
Absolutely not. I think that is a perfectly healthy story for a correction. And the thing is, as you said, anything can throw it. We can actually get another lockdown in the United States or even in China, and then that whole thing smashed totally down. So it's a bit risky, can go either way. But on the technical side, absolutely.
This is how it looks like, yeah? Right, okay. So I'm not losing it. That's good to know. Right, this was it. This was it. We have big things going on tomorrow. We're going to have the London hard fork expected on Ethereum. I know you care about this, like I care about some plant that you find in South America, but it's okay. You're going to learn. You're going to grow up eventually, and you're going to join me in this amazing journey in trading cryptocurrencies as well. Probably. Again, this is not investment advice. It's not a solicitation of buying or selling cryptocurrencies. It's just a friendly chat that we have here every day. Right, Reiaan, are we good for today? Shall we start trading now?
Oh, yeah, we are good for today. I will basically just watch the natural gas now, see how it climbs, but I'm actually on for maybe a sell on natural gas.
No investment advice. Yeah, no one follow his advice. No one follow his trades. Do your own research. Do your own analysis. Yeah, and do whatever you think is best for you. Right, Reiaan, thank you ever so much for being with us today. I'll see you again tomorrow, same time, same place. Ladies, gentlemen, traders, once again, thank you ever so much for being with us today. Join me again tomorrow, same time, same place, for a new round of market talks. And until then, of course, remember to trade responsibly and may all your trades be in the money. This show was sponsored by Markets.com.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading.